Okay, traders, just a quick sound test. Make sure that everybody's hearing me well. Can you please let me know if all is well? Yes, sound is good? Okay, perfect. So how do we survive the next financial crisis? Well, I tell you my personal belief, and it's not going to be getting really deep into in depth into trading. It's more like going to be talking in the idea of what's coming, just in case it's going to come. And I know it may sound a little bit surprising for some of you because we are in the height of a huge rally which started 10 years ago, and personally, I don't right now see the end of it. I mean, if people would have asked me, they did ask me 3 years ago, what do you think the next 3 years would look like? And we've been there 7 years into this rally. I was definitely saying, I see the future bright. I see the market continues to move higher. I don't see any reason to stop the market from continuing moving. And I definitely see the next few years, the market is going to continue running up. Now, if you ask me today, and again, we're just at the beginning, January 2020, the next decade. So what do I see? There's no reason for the market to come down right now. I mean, it looks great. Everything looks fine. Economy is booming. Unemployment is low. Everything really does look well. But isn't it always like that at the top? Yes, it is always like this at the top. So, are we expecting the next financial crisis? I would like to talk to you about, well, first of all, let me just say this. Yes, the next financial crisis will come. In fact, several will come. We're not immune from financial crises, from any financial crisis. There have been in the past and there will be in the future. We just can't, there's no way to ignore them. There's no way it's not going to happen. The only question, of course, is when it's going to happen. Now, it usually lasts, rallies don't usually last that long. It has been recorded in the history, in the far history, rallies that were even 12 years or so. So this could continue. And the fact that there was a rally that only lasted 12 years and then we came down does not mean that this rally is not going to last for 20 years. But we need to talk about the difficulties that the market is facing. We need to talk about what may happen in the future. We need to talk about what is happening now, and we need to talk about what will happen just in case things will happen. So I want to go back 10 years, 20 years, when I started trading back in 2000. You know, when I started trading, I had no idea what trading is all about. I did all the mistakes, just like many of you guys are doing. I mean, we're trying to do our best, but we're making a lot of mistakes. I mean, we're just starting out. When we're just starting out, we don't really know much. So it was a great opportunity for me to make money in 2000. That was the first crash, the dot-com crash. And that happened right at 2000 when I started trading. Did I make money during this period? What do you think? Well, no. I lost money. Why? Because I was a new trader. Yes, there were great opportunities, basically in shorting stocks, which I didn't know much on how to do that, how to approach this issue. I didn't really know how to approach trading altogether. So for me, 2000 was still a year that I was just learning, not only 2000, even a few years later, but definitely could not use my beginner's abilities in order to enjoy what was a fantastic opportunity for advanced traders. Now, everybody was making money in the 1990s, in the end of the 1990s, when the market was moving higher. It was really quite easy to make money. I was not a trader there, but I have witnessed traders. I mean, that's probably one of the reasons I became a trader in 2000 is because I witnessed what was going on in the market. I mean, that was crazy. Everything you bought just went higher. Even if you had a pullback day, the next day it went higher. Stocks came down 10%, the next day they moved up 15%. So you didn't really have to know much about trading. Everything you were clicking on, you could make money. And again, I had friends who were doing that. And I guess you guys also have quite a few friends who was trading through the 90s, and all of them did money. Nobody needed to know how to short stocks. There was no need to short stocks. Everything was just booming, moving higher. In 2000, it became a little bit more interesting because the market started coming down, and therefore you needed to know how to short. You needed to really become a trader, which I was not. But in 2008, I was definitely ready in 2008, and it took me some time. And I'm still kind of angry of myself that it did, but it took me some time. And the next crisis, I hope it's not going to take me that much, but it took me some time to realize that we are within what was a huge crisis. And it took me some time to start making money as I should have from the start. But nevertheless, it was the best year ever. And traders that I know, many of the traders that knew how to short, that were experienced enough to short, could have made money in 2008. And if we get back to that situation, if market will come down again, we need to enjoy. Actually, I wouldn't call it enjoy. Enjoying a financial breakdown is kind of weird. We don't really live through these periods enjoying. We were at that period in 2008. In fact, we didn't know if the ATMs would continue to let us take money the next day. Seriously, if you've been around in 2008, especially if you were involved in the financial market somehow, then you know what I'm talking about. There's a lot of people who were never involved in the financial market. They have no idea what I'm talking about, even if they were adults back then. But those of you who realized, who knew what's going on, we didn't really know if banks will exist another day. So the thing is, we don't really enjoy it, but let's just call it, we protect our money. Or this is how it is written here, how to survive the next financial crisis. Yes, you can make money in the financial crisis, but surviving is more like protecting yourself, not losing money and possibly making money. And yes, if you're a trader, you can definitely make a lot of money. But you know what? Even if you're not a trader, and some of you will not even get to that point, what you're accumulating now, the knowledge that you're getting now by being with us, every once in a while shorting a stock, this knowledge that you are right now taking is something that could help you protect yourself in in the next financial crisis. And I won't tell you a short story about this. It's a kind of a funny story. I was in a seminar teaching some people. It was a big seminar, a few hundred people, and I was talking about what I believe would be the next crisis. That was in 2007, and I anticipated something was starting to go wrong. I was watching the market, and things were starting to look bad back then. And I was talking about the fact that I think that in 2000, actually it was at the beginning of 2008, and I anticipated that the things will deteriorate and become even worse. And I said to a few hundred people, I said, and I wasn't alone. I was not alone at that conference. There were a few other people with me, some of them bankers, very known bankers. And I remember at least one of them was kind of joking, telling everybody in the conference that I'm kind of talking nonsense and nothing's wrong and there's not going to be any financial crisis and something like that, whatever. Some people took me seriously, and again, I was talking back then that I don't think the market will go up and probably will continue coming down. It's not that I thought it's going to be a crisis. No, I did not anticipate a crisis, but I definitely thought the market will continue coming down, just continue trending lower. One of these people who was in the, let me tell you this a little bit differently. I stopped on my way home. I stopped in a mall, and I was just waiting for a pizza actually, and it took like 10 minutes, and I was supposed to come back, and I was just walking in the mall, and and all of a sudden a person stops me right in front of his shop. He had an ice cream shop, a big ice cream shop, and he stopped me and he said, he knew me. He was in the conference. He took a look. He took a look. He saw me. He stopped me on my way, and he said, "Look at this ice cream shop. That's all due to you." And I said, "Why? How did I help you get this ice cream shop?" He said, "Well, you remember this conference you were talking about? Most of the people didn't do anything. Personally, I took out my money from the bank, I invested it in this shop, and now I've got my own business instead of losing, I don't know, 70% in stocks that I had. Well, a small thing, I was very, very happy. And, it makes me happy to hear this kind of stories. And the only problem, that's the funny part, a few months later he went bankrupt, so this business was closed too. So that was nothing I could there was nothing I could do about it. But anyway, that was something sometimes that you can anticipate. Well, anyway, the next financial crisis will come. So how do we expect? How do we anticipate the next financial crisis, and where from will it come? So we need to talk on how do you prepare yourself. And the main thing you need to know is that you need to know how to short stocks. Now, you're here in this room with me, which means that you guys are shorting stocks. Those of you who didn't yet short stocks for any reason, you need to master shorting stocks. In the financial crisis, you just can't go long. Yeah, I mean, of course, there are some ETFs that go the other way as the S&P 500 and stuff like that, but that's not what you're supposed to be doing. There will be huge advantage for people who really know how to short stocks. And knowing how to short stocks, that would be very, very important. It will be very, very important in the next financial crisis. And that's what the main thing you need to know. Now, you need to understand that 99 of the people around the world don't even know what shorting is all about. And out of the 1% who do know what shorting is, 99% of them don't know how to short stocks. So I'm talking about the vast majority of people out there in the world don't know how to short stocks or don't even understand what shorting is all about. The advantage of shorting is in the fact that most people don't know how to do it. There's no money in something that everybody knows how to do. There is money in a place where you and just a few people like you know how to do and what to do. Shorting stock is a great occupation in my opinion. It's a lot of fun, but it's also it's a knowledge that is very, very rare. And if you know how to short stock, you have an advantage, especially when the market's coming down. So that's the main thing you need to know in case you are preparing to a financial crisis. Now let's talk about the foundations of the next financial crisis. Let me go to the next slide here. So anybody knows what Nixon did to the US dollar in 1971? What happened in 1971? Anybody knows? That is correct. He removed the connection to gold. He decoupled from gold. That's true. So that was a big issue. That was a huge issue. And that was one of the reasons that we saw the 2008 crisis. And in my opinion, and I don't have to be a genius, the next crisis will also come probably from that. So it was called actually the Nixon shock. It was a series of economic measures in response to increasing inflation. That was the problem back then. But the most significant was the canceling of the international connection between the US dollar to gold. So it was the standard until then, until 1971, but it was changed. Now, the name of the currency that Nixon has created is called fiat. And the origin of the name fiat in Latin means let it be done. That's what the name derives from. So what is really fiat currency? It is a currency, in fact, without any intrinsic value. So it does not couple with gold anymore. It is only determined by two things. It is determined by the government, in fact, regulation. And the other thing is just parties engaging in exchange, agreeing what the value should be. So the fiat money really has nothing to do anymore with gold. When it has something to do with gold, then you couldn't just print it as you wish. You couldn't issue derivatives of currency and things like that, which was the problem in 2008. We're going to talk about it soon. And so the world was much simpler back then, before 1971. So let me see if I've got something to say here. Yeah, until then, so anyway, until then, money was created from, was coupled with gold, silver, or any other precious metals. And, government banknotes, in fact, began in the 11th century in China. But again, they always coupled it with gold or with other precious metal. But fiat really works now a bit differently. It is in fact, the thing is that once this was decided upon, then the whole world of derivatives began. Now, what is a derivative? It is a contract which value derived from, in fact, from other than, I'm trying to find the right, well, it is in fact an agreement between two parties who agree on the value of a future commodity. Let me put it in the simplest way. And there are two examples here, and this is in fact how it started many years ago. And let me just talk about the basic examples here. For example, why was it start? I mean, why did it start with derivatives? For example, if you're a farmer and you want to grow something, you probably need to invest money before you see the results. You need some cash in order to plant your fields and so on before you get the results and before you can sell your products. So you can sell what is called a future, which is a derivative of the real product. You can sell a future on your expected product. So if I'm a farmer and I need money now, I could go to a future exchange and I could sell somebody who wants to buy my future, my product in the next year, for example, let's say in the next 6 months or so, I could sell my product which does not exist right now. So that's how it started. And if you are running an airline, you probably want to make sure that your oil price doesn't go higher in the future. Therefore, you can buy, you're now the buyer, you're not the seller, you can buy a future of oil, and in this way protect the future price of oil, protect your company from the future price of oil in case, for example, oil prices will go higher. So this is how it started, and it started very nicely with the best of intentions. In Japan, it started in 1710 with an exchange for rice. And then in London, metal exchange in 1877, 1898, the Chicago Mercantile Exchange, the CME, agriculture commodities, again, farmers and so on. So it started with all the best of intentions. But again, this is how it started, but things have changed. Things have changed mainly because of the introduction of modern computers, and mainly because the Wall Street appetite for making easy money. So in the 1980s, really, things started to look a little bit different. Now, this is the information age, and new financial products came through these times. So in 1980s came the CDOs, collateralized debt obligations, which were very well known from the 2008 subprime crisis. And then in the 1990s came the CDS, which is in fact a derivative of the CDOs. So that's, they started by selling mortgages. They started by selling mortgages that in fact were real mortgages, and then of course they grouped them, and then they did the CDOs. So banks were selling these grouped CDOs to everybody who wanted to buy them, but then they ran out of CDOs because people continued to buy homes, but not enough in order for Wall Street to make as much as money as they wanted. And then in the 1990s came the CDS, which were in fact derivatives of the CDOs, meaning they were not real mortgages, but derivatives which were done for the real mortgages, and therefore they could have sold many more contracts, and of course make money in commissions and make money in whichever way that they like doing. And the worst of all is what we are as traders trade all the time, which are in fact the ETFs. And the biggest boom of ETFs really started in 2000, and again, exchange traded funds. And you guys know what ETFs is all about. So what I have to say about derivatives is nothing in compared to what a much more famous person said, and I'm talking about Warren Buffett here, which mentioned that they are a financial weapon of mass destruction. And he knows what he's talking about. He definitely knows what he's talking about. So this was the really reason why everything collapsed in 2008, the big crisis, the big financial crisis, the subprime prices. And I'm not going to get into the details of what happened, but let me just tell you how the next crisis is going to look like. For example, I'm going to give you an example here with gold. So, just an example here. Let's talk about the volume. The volume of gold traded in the London gold market is 1.5 million tons of gold. That was the number in 2017. Now, if we're talking about the total quantity of gold in the world, now remember, we're talking here about 1.5 million tons, okay? Now, take a look at the next number. There's only 200,000 tons of gold in the world, and it's the estimate, of course, and this is the estimate of gold in the world from the days of the pharaohs, and including the gold is being worn by a woman somewhere in India that we don't know about, who, I don't know, wears a gold ring. So this gold is being traded 1.5 million tons a year, where there's only 200,000 tons of gold. How can this be done? Well, in the past we were trading real gold. Right now we're trading derivatives of gold. In fact, the difference between real gold in the world and the traded gold is estimated at 1 to 500. So really, this is not anymore about real gold that is moving hands. This is just about gambling what the price of gold. I mean, in the past, you could have used futures in order to protect your business. For example, it's no longer used for just protecting your business, hedging your risk. It is used for gambling. I mean, the amount of gold that is being traded in the world right now, or should I go, the casino of gold, is at an enormous number that is just estimated at 1 to 500, the real amount of gold. And remember again, it's not the gold that is traded in the world, it's the gold that is worn by somebody in the world, and of course traded too. Now, it is all well as long as, both parties, the one who sells the contract and the one who buys the contract, agrees that there will be a financial payment at the end of the contract. Meaning, I bought a contract and let's say I'm expecting the gold price to go up, and yes, the price went up. Now I'm being compensated with more money than I invested in. That's fine. But you need to know that I can ask for real gold while at the expiration. But currently, only 1 to 2,500 contracts is really ending in real gold. So the vast majority, 2,500 contracts, just one is ending in the real gold request. Now, just imagine what will happen if, let's say, 10%, you know what, 5%, you know what, 1% of the contract, people will require the real gold. Why should they do that? Let's, for example, think about the next option, inflation. Let's say inflation starts rising and I'm a bit worried, something's going on. Let's say I want the contract to end in real gold in my hand. What will happen if just 5% of the people will ask for real gold? There's no gold in the world to provide it, not even 1%. The price of gold will just go sky high in a second, in a minute. The more derivatives you have, the more it has nothing to do with real gold in the world, the danger becomes much more real, much higher, and again, the foundation for a possible new crisis. Because if something like this is going to happen, then the subprime crisis would be nothing like what's going to happen next. So the price of gold would just jump to unimaginable values. Banks will collapse, the economy will crash down. This is one of the options. Now, I've talked about gold. Maybe you guys are not buying gold. How about I talk about ETFs? Like, what's the next thing with ETF? I mean, what's ETFs are all about? Well, we know what ETFs are. We learn about it. We talk about it in our courses. It's an exchange traded fund. You buy this fund that looks like a stock. If it moves up, you make money. If it comes down, maybe you can short it or you lose money. And, ETFs are not a new invention, but more and more money is coming into ETFs. If I would just talk about the S&P 500 ETF, the SPY, it has approximately $280 billion invested. It is no longer invested in real stocks. It is a derivative of the real market. So just imagine what can happen if the market comes down, for example. Now, these ETFs, for example, they have to sell. They in their agreement with their customers, most of the ETFs, now depending which, of course, most of the ETFs have an agreement with you which says if it's going to come down to this or that, they need to sell the assets. Which means that, for example, if it comes down, multiplied by I don't know how much, just the S&P 500, $200 billion, that money is not in stocks, most of it. Then think about what can happen to the market once the S&P, for example, starts coming down and more money is pouring into ETFs. There are currently more than 1,600 different ETFs around the world, and some of them are just ridiculous, like DGLD, 3 times short ETF of the gold. So you think, if already gold is not a real asset anymore, it's not a real asset, it's a derivative of the real asset, 500 times. Now you've got another derivative on the derivative, which is the DGLT, which is the 3 times short ETF of a derivative. Do you see what I mean? So now we have derivatives or derivatives. Some of them follow companies which are ridiculous, like you've got ETFs of companies which are engaged in losing weight, pig bellies, whatever. So if you want to bet on everything around the world right now, you can bet on it. Right now you can bet. You can buy an ETF, you can sell an ETF. But what will happen when the music is going to stop and you will be looking for the chair? There's not going to be enough chairs for everybody. In fact, there's not just one chair missing. There's many chairs missing. Most of the people will not find a chair to sit on. And the thing is The next financial crisis is going to be a joke compared to what happened in 2008. The financial crisis in 2008 was solved overnight with $700 billion. And then a few more trillions. Just a few months ago, there was this repo thing between banks. The overnight banking interest came up overnight to something like 10% annually. Everybody was amazed. Immediately the next day, because that could have been the next financial crisis. And that happened because of a small shortage of cash. Now remember, a small shortage of cash in a world that is already very, very derived, and nothing is real, could be the next spark that would light the next crash. So overnight there was a huge problem. The interest rate came up, spiked up to 10%. In between banks, 10% interest. You just don't understand if you don't understand the meaning of this is huge. The next day, the Fed came in with $500 billion. You remember again, 2008? They thought whether they should bring the money at all, and then debates, and company went bankrupt, and the market came down. Then they came with 700. This time they came with 500 billion, and we know nothing about it. We know, but it just didn't take the headlines as much as it did in 2008. Why? Because nothing can happen now. In order to keep the market, they need to keep pouring huge amounts of money into this system in order to prevent the next crash. And the situation is getting more and more intense. The situation is getting harder and harder to maintain. And it could continue for a few more years. But please understand, the next time it's going to happen big time. And I don't think they will be able to save it. I don't know. They need to print so much money. I don't know what's going to happen then. So there's right now approximately $6 trillion invested in ETFs around the world, which is 10 times more than 2008. 10 times more than 2008. And really, most of them are against assets that really does not exist. And, the International Bank, the Bank of International Settlements estimated the total value of futures contracts at 542 trillion. Just think about this number. This is the number they estimated of futures currently around the world. It is in fact 7 times the total of gross GDP of every country around the world put in together. 7 times the total of gross GDP of all the world. And it's 10 times more than it was in 1995. Some, by the way, estimate it at 1,000 trillion. So this is possibly not the right estimation. From this, you need to know, if you live in the States, that 25% of this is in the US. US banks own 25% of this. In Germany, for example, Deutsche Bank has 53 trillion in futures trading. 53 trillion. Now, it's one bank, a big bank in Germany. But the whole GDP of Germany for 2018 was $4 trillion. So just Deutsche Bank is holding 53 trillion in futures. Just imagine what could happen for a very small problem could arise. So are we talking here about a house of cards? Well, the financial world, in my opinion, is a huge house of cards. It's a huge house of cards. And the question is, what can happen if something goes wrong? Now, assuming this is a house of cards, and I tell you what, there's a lot of people who could argue with me about this. Assuming this is a house of cards, how can you protect yourself? Well, let's talk about some measures that you can possibly take. And I'm not getting into the in-depth of trading here. You need to understand that I'm just talking about my vision to what could happen sometime in the future, and let's be prepared. That's it. So the first thing, in my opinion, you should do, and there will be a lot of people who would argue with me about this, but I would definitely tell you what is in my mind, and I don't care if it sounds to some people today here listening to me as possibly a joke. Well, the first thing I have to tell you is don't trust banks. And I've been enough time around to know what I'm talking about. In 2014, I had $4.5 million, actually not me, one of my companies had $4.5 million in a bank. The bank went out of business. There was supposed to be it needed saving, or let's say it needed the government, it needed the European actually market to save it, and there should be an insurance of the money. There was supposed to be some kind of insurance of the money, and the money was gone overnight. $4.5 million. That happened in 2014. I was very, very lucky to end this crisis with a loss of 450,000 euros only, not 4.5 million euros. It was 4.5 million euros. So this crisis ended for me with a smile. I was smiling. I was happy. It was the happiest day of my life when this crisis was eventually over with only a loss of 450,000 euros. Now you need to understand this took a few months before it was decided that we're going to get the money back, and this would have been huge. I mean, we could have survived it financially. Seriously, we could have survived it financially. We were not about to collapse or anything. There was nothing of the sort. It was not even close to that. But the damage could have been huge. And the bank just decided overnight, you don't have this money. This money, you're no longer the owner of this money. And banks can decide it, government can decide it. It could be as easily as that. The next day, the only thing you could do is take out of the bank 100 euro at a time. So if you had a card, 4.5 million euros in the bank, and you want to take something out, you can go with your card to the next ATM, and the maximum you can get is 100 euros a day. That's all you can get. And that was the decision of the bank. That was the decision of the government back then, and whatever it was, I'm not getting into names here. But the thing is, you can't trust banks. They can take your money overnight. I've been through this, and believe me, I don't want to be there again. And I do take the measures to protect myself. You can't also, in my opinion, trust cash. You can't trust cash because cash is in the hand of the government. The government can tell you your cash doesn't worth anything tomorrow. We're going to print a new cash, and for whichever dollar you have, you're going to get tomorrow 10 cents, whatever. They can say everything. Don't trust cash. Don't use too much cash because cash may not worth anything. And don't invest in stocks. It may sounds funny from me saying that, but I do not invest in stock. I don't trust the stock market. Stock market could collapse tomorrow. If there's going to be a financial crisis, stock prices could come down 99%. Could come down dramatically. Could come down, and I do not trust what's going to happen tomorrow. I do not trust the market. I do not trust companies who tells me that their products are great. I do not trust the stock market. I love trading the stock market. What I see in front of my eyes is what I do. Market goes up or stock goes up, I could buy. Comes down, I'm shorting it. At the end of the day, I'm in cash, and every few months or so, for me, every 3 months on average, I take my money out of any broker I'm dealing with. Because I don't want too much money in the hand of the broker. I don't want too much money in the hand of my banks. I don't want too much money in the hand of my investment in my insurance companies, pensions and things like that. I don't have any pensions. I have zero pension. And you know what? Why? Because every dollar that comes into my pension funds, as soon as it comes the date that I can take it out without paying taxes, and there's depending on where you live and so on, I take the money out. So my pension is right now ridiculous. I don't have any pension, almost none, because I don't trust the money in the hands of the insurance companies. Again, that may sound weird to you. It comes with a lot of experience, in my opinion. I think I know what I'm talking about. Anyway, my broker gets as much as I can get insurance from the broker. If it's 20,000 euros or $100,000, that's as much as I have with my brokers or with my banks, as much as is insured. I'm trying not to get too much money. So let's talk a little bit about what you should do. So what I believe you should do, I already mentioned that you should probably day trade. Now, that is my profession, that is my companies, and I'm doing and I'm selling what I believe in. I believe that every people around the world should day trade. Of course, that's a foolish thing to say, because if everybody's going to day trade, then we're going to be losing money. We can only make money because most of the people don't know how to day trade. And again, I mentioned earlier shorting. You can't make money where most people know how to make money. You definitely can make money where most people don't know what to do with. Like, most people don't know how to day trade. Most people don't know how to short within day trading. That's where the real money lies in. So yes, you should day trade. You shouldn't invest in stock. You should be day trading stock. Don't trust the market. Don't trust anything. Take out the money as soon as you make it, and just don't invest in stocks. Swing trading is great all the time, but even better during a market crisis. And why is that? Now I'm getting back to things that I went through in 2008. First of all, day trading in 2008 did not look like what we're doing right now. For example, what we're doing in the trading room did not look the same. It was a bit different. Actually, it was much different. I'll give you an example. Today, our targets and our stops are relatively very small. When the market becomes very volatile, you cannot use the same stops, the same targets. You must give stocks much more space. Actually, it's my next slide, so I'm going to keep it to the next slide. So swing trading, for that matter, becomes even better, because in swing trading you provide more space and you go with the trend, and the trend goes very nicely, but in a very short time it's doing everything, but in a relatively very short time. But again, swing trading, if you're holding to stocks that are moving up like in the end of the 1990s, or you're shorting stocks that are moving down like in 2008 and the beginning of 2009, you can make much more money from swing trading than in day trading. It took me some time to understand that through 2008, but at the end of the day, I was doing both, of course. But swing trading should be regarded as something that you should do much more during a crisis. And the most important thing to protect your future is buy real estate. The only known way to me, I mean, there are probably more. The best way, in my opinion, to protect your future is to buy real estate. I'm very happy to say that I follow this route. When I started trading, my first few $100,000 went into real estates. And whatever I had then is multiplied during time. And now I make more money from real estate than I make from trading. My hotel business, my real estate business is much more than my day trading business. Whatever I do right now in day trading is just a small fraction of my income that comes from real estate and from other businesses that I have. So the thing is, the only way to protect yourself from the government in case cash doesn't worth much anymore, in case they put their hands on your bank account as it happened to me. In many other ways, the only way I know is to have real estate. Now, if you can afford it, I mean, of course, not everybody can afford it, but if you make money, if you come to the point where you start making money, and I think a next financial crisis is also an advantage for a trader, which means you can make a lot of money, like was done in 2008, then you can definitely enjoy this money and use some of it for the long term in my opinion, real estate. Let's talk about some trading things to do. Don't use margin for swing trading. I just mentioned the swing trading is very important during a crisis. But if you start using margin and the market is very volatile during these periods, you're going to end up moving out at stops. You're going to be stopped out of too many trades. You will be losing money. You cannot use margin in swing trading. I mean, when I'm saying not use margin, I'm talking about 1 to 2. No, certainly not 1 to 3, 1 to 4, 1 to 10. Okay? Maybe if you want to go 1 to 1.5, 1 to 1.2, something like that, every once in a while, fine. But basically, don't use margin if the next crisis comes along for swing trading. Now, you can use your margin. You can definitely use for your margin for day trading. That is assuming you know exactly how to put your stops and everything. I mean, for day trading, we're gonna have a different chat about this altogether. But swing trading is an important part of a crisis, but don't use margin. Otherwise, market's gonna take you out easily. One big swing is gonna take you out. And then you'll be out of the game. The market will continue coming down and you will just not be able to enjoy that. So without any margin in swing trading. And the next thing I would like to talk about is get ready for bigger stops and targets. I mentioned that already. So market is going to be much more volatile. We need to change our trading system. Trading systems do change during a crisis. We do all have our own trading system. I certainly have mine, but things will change during the crisis. We'll have to adapt to that. It's not going to be easy. In fact, in the beginning, we could be losing money, but it will take us, hopefully less than it took me in 2008 to start making money, because as I mentioned earlier, I'm still thinking about this period and think I could have done better, although it was great. But again, it will take us some time to adapt. Hopefully, just a very short while to adapt. But get ready for bigger stops and bigger targets. And of course, as I mentioned earlier, master short selling. Short selling is the key for success during a crisis. And you know, I often say this to people I know. During a crisis, everybody's losing money. You will be losing money during this crisis. You could make it back through day trading and swing trading, but just like every other, your pension is coming down. Your pension fund that owns stocks is coming down. Your house probably worth less money. Everything you're losing money. Everybody's losing money during a financial crisis. The question is, how do you protect yourself? Even if you're not a trader, even if some of you will not survive as traders, many of you, sadly, will not survive as traders. It's a hard occupation. Even if you come to the point where you do not survive trading, you need to know shorting. And you know, even if you will not survive trading, I believe one of the biggest advantages of your journey right now is knowing how to short. Because you can't just start learning how to short if you never were a trader and a financial crisis just starts along tomorrow and you never shorted a stock. You cannot just start understanding what shorting is all about and start making money from shorting at the next financial crisis. You just can't do that. If you know now how to short, and I'm not talking about trading, I'm not talking about gap trading, I'm not talking about gap and goes or whatever. I'm not talking about anything other than knowing how to short. That to itself could save you from financially, from bad financial experience during a crisis. because you will be losing money in the next financial crisis, but just shorting the S&P 500, for example, just that, just shorting the Qs, for example, that's a small thing. Putting some money on that could make you enough to cover your losses or probably gain some. So you just need to short. And you can't just start learning how to short a month before the financial crisis starts, because you will not know enough. Now you're going through a journey. Some of you may not survive this journey, but some of this journey will remain. And the most important thing that will remain, in my opinion, is that you will know how to short. And it's not going to be that hard to make some money during a financial crisis. You'll be able to do that. But that's about it. I hope I didn't scare you too much. Seriously. I'm not trying to scare you. I'm just trying to be reasonable and say what I believe is going to happen. And we will go through another crisis, more than one. It's just a matter of time. It's going to happen. It's how the world is about. There was a chance just yesterday regarding the issue with the Iranians. Is there going to be a war? What happens in a war? Derivatives during a war are going through very hard periods. Some of them may change the balance. This could have happened just now. Well, Trump did what I did not expect him to do. He moved out of this issue and probably did the right thing financially. I don't know about politics. I think he did not, but financially he probably did the right thing. But what's coming next? What's going to happen in the next few months, days, weeks? I don't know. Well, we'll see. And I hope it gave you some basic idea of what could happen. And if you totally disagree with me, and this could definitely be the case, then get ready. The next crisis will come. If for the reasons I mentioned today or for other reasons, I don't know. Next crisis will come. We'll need to get ready to handle the next crisis. I will have more in-depth meetings regarding strategies that I just need to reflect back on 2008 and come out, because I don't have them written. I just need to reflect on that and come out with some of the things. I already gave it a thought in the last few days when I decided to make this webinar today. But basically, there's more to come. There's more things to discuss. There's plenty more things. So today was just the opening of something that I want to discuss a little bit more. So do you have any questions? I will be, yeah, the world is a scary place, Paul, right? Any questions, any remarks? I'm here. I'm here to answer. Please use Q mark so I know you're asking me and not just chatting. I see one Q mark here. Do you also invest in REITs? No, I do not. I do not invest. Although I don't think it's a bad idea. I just personally am quite involved in real estate, and I've got my own expertise, so-called, developed throughout the years, and my partner's expertise. So no, I do not do that. But I think I've got an advantage doing it myself. Any more questions? Eugene, are there any potentially problems with CFD brokers like TFS during financial crisis? In a financial crisis, everything could happen. Everything could happen. Brokers, doesn't matter, doesn't have to be CFD brokers. Every broker has to be protected by insurance. So as long as your money is insured, not by the broker, by the government. And again, I told you earlier, you cannot trust the governments, but that's right if your broker will go down, that would be the least of your problems, because your main money would probably be in the bank or in your pensions or whatever. So if the government goes down, your money in the broker goes down too. If you are trading a broker, and doesn't matter if it's a CFD, for example, I have CFD broker, I trade with Colmex. Colmex have an EU insurance for up to 20,000 euros per account. If you have more than 20,000 euros in the account, it's not insured. I personally have more than 20,000 because I can afford it, and in case something happens, whatever, I know I'm not going to be insured more than 20,000. But up to 20,000 euros, you're insured. In the States, for example, if you have an account, it could go up to $100,000 insurance. But again, this insurance is backed by regulatory government entities and so on. So if something goes wrong, it's not about your broker, it's more about your government. So as long as you're working with a regulated broker that has the insurance, you're not in trouble. Yassin, what is the difficult thing shorting compared to going long? It is not. You just need, the thing is, Yassin, you just need to know how it works. I mean, it's not. I mean, if you're a trader, it just comes naturally. But you ask a person in the street what is shorting, and it would look to them like it's Chinese. It's just they don't understand what you're talking about. Can you actually make money from stocks that are coming down? There's no problem with that. You just need to practice it. That's it. A bit practice, and that's it. It's not a problem. But if people are just starting to learn about shorting right now, they cannot survive the next or they cannot help them. They cannot make money in the next financial crisis. Cryptocurrencies. If I don't know about cryptocurrencies actually, Julian. I don't know what's going to happen to cryptos in the next financial crisis. I think actually they're going to go up, in my opinion. But I'm not an expert. No, I do not invest in Bitcoin. I don't think it's safe enough right now. But you can invest in Bitcoins, but it's very hard to take your money out. It's actually almost impossible to take your money out. I do have a few friends who would like to take their money out. It's kind of hard to take money out, and with all the regulation, even if you try to move your money to a bank, I don't have this issue, but I do know some people who have these issues. Welcome. Yes, of course I swing trade. I don't usually, Peter, interesting question. I just had a long conversation with Scott yesterday. I swing trade, and I definitely do, but we didn't put enough emphasis on this in the past maybe years. So we talked about it just the day before yesterday, I believe we talked about it. We had a long conversation, and we do intend to do some more regarding swing. Talk about swing a bit more. I think we a bit neglected this issue. It shouldn't have been like that. No, I do not think shorting is harder. No, I just mentioned that. No. Jeff, did you build all your wares? Yeah, Jeff. I started making money only in my 40s. In fact, I don't know if you read my book. At the age of 38, I believe that was. What was it, 1999? Yeah. At the age of 38, I was worth minus $500,000. I owed money at 1999. So all my money was, I only started making money in my 40s. I'm 57. I'll be 57 years old next week on the 14th. If you want to prepare me some kind of birthday present, you have the time now. Any more questions? Do you think CFDs will have the advantage during a crisis? Of course they will. In 2008, Byron, I traded stocks in 2008. I had no CFDs trading platform back then. And in 2008, I would have loved to continue shorting financial stocks, but it was stopped at some time. So they stopped. They kind of stopped the crisis by stopping the ability to short financial stocks. Now, if I had CFDs back then, volume-wise, liquidity-wise, shorting restriction-wise, everything, I could definitely make much more money. Definitely could make much more money. If I'll show you how to short, I mean, that's the basic thing we learn in our lessons. First, even in the self-study course, and then starter course and everything. Jamed, oh, that's not for me, okay, sorry. We'll see if this works in the crisis. Of course they will. I don't know. I don't know. In fact, if stocks, for example, will be restricted from shorting, I guess CFD brokers may restrict CFDs too, because they will not be able to hedge. They will always open some, so you will have probably more. You will probably have more liquidity, more variety, and things like that. But thinking about it now, I'm not sure it's going to be a huge advantage. It's always is an advantage, but it's not. It may not be as big as I just said. Yeah, they did stop us from shorting in 2008, but only financial companies. Well, I think we're done. No more questions. If I'm not mistaken, I've answered all, but if I did not, I'm sorry. I just missed maybe some of your questions. Guys, thank you very much for spending the last 1 hour with me. 1 hour and 3 minutes. It was a pleasure. And again, I hope I didn't scare you too much. Sleep well. It may not be coming tomorrow. And even if it will, I hope we could make enough money to save ourselves. We're not going to save the human race, but we can definitely save ourselves from the next financial crisis. I'm not looking forward for the next financial crisis. I do remember 2008. It was not a pleasant feeling. And since it ended well and the money remained in the banks, then I could happily say that I made money from this. But it may not have been this way. So I'm not looking forward for the next financial crisis. I'm definitely not. But if it does come, I will know how to protect myself. And we're most likely going to be doing that together. So, as always, let's have fun. Have a good day, good night. And I'll see you all tomorrow in the trading room. Bye, guys. Thank you for watching our video. The material was taken from The Market Whisperer, my Amazon best-selling book. This essential guide to stock trading is ideal for those with no background or experience in stock trading. Click here to read the 200-page part 1 of this book absolutely free. If you like this video, please subscribe to our YouTube channel where you can view many more stock trading videos. Questions or comments, please submit them below.